Ladies and gentlemen, how you doing? This is Matthews from M&L FOREX Traders. I hope you're doing great. I hope you're enjoying your weekend. Okay? So, what if I told you that you are only one skill away from achieving the consistency that you desire? What if I told you that that particular skill is actually learnable? You can actually achieve consistency. It's actually possible. What if I told you that? Well, watch this video to the end if you want to learn this skill. It's very easy to learn, and that's something that you can actually do. All right. So, first of all, as a forex trader, as a forex professional forex trader that you want to become, you need to actually understand and be able to internalize that you are actually a risk taker, and you should treat yourself as one, because we are always taking risks, right? That's very important to understand. We are constantly taking risks. Every time we put on a trade, we are taking risks, and we are supposed to predefine our risks even before we actually enter into a trade. That's the way it's supposed to be. We're supposed to be able to predefine our risks before we enter into any particular trade, right? It's very important. When you actually understood your risks and you know exactly how much you're risking on that particular trade, you know how much it's going to take to prove to you that if that trade is going to work or not. You have to actually understand, I'm putting this much on this particular trade. If this trade works, well and good, I make this much. And if I lose this trade, I lose this much, and I'm actually comfortable losing this particular amount of money. And you're supposed to do that every time you put on a trade. That's the way it's supposed to be, folks. That's how to trade like a professional. Okay, so obviously, before all that, you must have an edge in the market. What is an edge? An edge is simply a higher probability of one thing happening over another. You need to have that. All right. So you need to have back tested strategy. You need to have forward tested strategy so that you are absolutely sure that not over a single trade, but over a series of trades, you're going to turn out to be profitable over a series of trades. That's the most important thing, because we know that we cannot predict the outcome of an individual trade. We can't, because it can either lose or win. And no matter how nice a setup might look, no matter how confident you might be about a particular setup, doesn't give you any guarantee that that trade is going to work. It's only when you start to think in those lines, when you start to trade like a professional. All right. So your only job becomes to objectively identify your setups every time. That's your main job. Your job is not to predict which trade is going to win, because we cannot do that. That's the short answer, folks. We cannot do that. Therefore, the only thing that we can do is make sure that we are taking the right trades every time. We are right. We are taking our setups every time. We are taking time to objectively identify our risks every time. All right. So here you go. You have an edge in the market. You know that over a series of trades, you'll be positive, right? You have a positive expectancy over a series of trades. All right, great then. Good job. So, what's going to happen next? So, you must be able to actually execute this flawlessly. You must be able to do this effortlessly. Okay? So, you have a trade, for example, you are trading Euro USD, and with stop loss of uh, let's say 20 pips, right? And your target is 100 pips. Okay, great. So you have a target of 100 pips and the stop loss of 20 pips. That's great. Then ask yourself, how much do I have in my account at that particular time? So let's go ahead. Let me show you what I do and what I would advise you to be doing every time you put on a trade. So I'll head to myfxbook.com. Let me just show you right now. This is actually very, very important because it will actually help you. So I'm here, right here. So head over to myfxbook.com, go to where you are seeing calculators, and then click on position size calculator, right? And then come to this level right here, enter the kind of pair that you're trading. If it's your USD, put it in there. GBP USD, put it whatever pair you're trading. But I wouldn't advise you to use this calculator for things like gold because it won't give you an exact a correct figure. Okay, so you come here, you type whatever, let's say GBP USD, it will come right there. So right now we're looking at the Euro USD, remember? Euro USD right there. And they're asking you, what is your currency? What currency do you use? For example, I use USD. Then they're asking you, what is your account size at that particular time? Not the equity. For example, you might have trades running. The equity will give you all, your balance and whatever trades are running, right? You have to make sure that you use the balance. Okay, so let's say you have $1,000, right? And they're asking you what is your risk ratio? What are you risking? How much money are you risking on that particular trade in percentage? So it can be in percentage or it can be with money, right? Say maybe you want to risk $20, anything like that. So they're asking you here. So personally, I would advise you that you use 2%, right? So let's go with 2%. So you're risking 2%. And what is your stop loss in pips? We said our stop loss is 20 pips. Okay, as simple as that. And then we just hit calculate. It will do our work for us, guys. So check it out, right? Meaning 2% of $1,000 is $20, right? Therefore, our lot size that we're going to use is down here. We're going to use a 0.1 lot. Okay? We're going to use a 0.1 lot as our lot size because we are risking $20, which is 20%, which is 2% of our account. That's very, very important, guys. So make sure you do this every time. So what you're going to realize that as the pips go up, this right here is going to be reducing. If you reduce the number of pips, then the lot size is going to increase. Okay. So for example, let's say we changed this to 30 pips stop loss. We calculate, we see that it actually reduced from 0.1 to 0.07. You see that now from using $1, we are now down to 70 cents. Why? Because we've increased the number of pips. Let's say we reduce to 10 and see what happens. Let's see what happens. You see, we're now using 0.2. What has changed? It's just the number of pips. The risk reward ratio is still the same, therefore even the risk amount in dollars is still the same. This is very, very important, folks, and you must be able to do this consistently. You must be able to do this consistently. If you don't, it's going to be hard for you to actually achieve consistent results in the market because you need to exactly understand and internalize that how much you're risking on an individual trade because we don't know which trade is going to win. There's no way we should put so much confidence in this particular trade with so much hope that it's going to win and we end up piling the risk, doubling the risk with the hope of having a very good win. Ladies and gentlemen, it doesn't work like that. It doesn't work like that. So we have to accept that there's a random distribution between wins and losses. And anything can happen in the market, ladies and gentlemen. Anything can happen. Even the most beautiful setup can actually turn into a loss. It's only when you understand that, when you're able to trade like a professional. Guys, that's how they do it. That's the reason why they're able to achieve consistent results over time. It's because they're able to calculate their risks. Ladies and gentlemen, this will have a profound impact on your psychology. Risking 2% of your account won't kill you, okay? Unless you don't have an edge in the market. So I advise, if you don't have an edge in the market, please, we have a lot of videos on our channel, all right? Where we teach you about our strategy and how to use it. If you still need more information, we also offer mentorship and signals. Please find someone with an edge, learn an edge, then you can do this, right? So this will have an impact, I mean a direct impact on your psychology. If you're trading using 2% per trade, or 1% to 3%, you won't have so much stress. You don't have some. You won't be panicking a lot because you're just risking a small amount of your account, and it won't have so much. It won't be very much on your for your brain or for your mental, because it's not a lot. But when you've entered into a trade, remember that time when we entered into a trade that actually calculating the risk. What happened? Remember how you're feeling? Exactly. You don't want to feel like that anymore. Make sure you actually calculate your risks every time. It will be very good for your psychology. It will be quite easy for your psychology because you exactly know how much you're risking. Well, if that trade goes wrong, I lose 2% of my account, which is just $20. However, if I win 5 times or 10 times the amount of money I've risked, which is actually very good. So I'm telling you guys, this is the holy grail of forex trading. You must be able to actually calculate your risk every time. And for example, right, all these pairs, they're not the same. For example, let me give you an example. Right now, we're looking at Euro USD, and we said we're risking 2%, which is $20, right? Let's change it up a little bit. Let's bring USD Swiss. Let's see what happens. Is it going to be the same? Risking the same, $2 with a stop of 10 pips. Let's see. We go down. Now you see that it's different. Okay? You see that the lot size has changed from 0.02. From 0.2, now we have 0.18. What has changed? That's There's a difference in the value, okay, of that particular currency pair. It's different. So there's no need of you actually saying, I'll just be using 0.2, or I'll just be using one lot. It doesn't work like that, ladies and gentlemen. You have to calculate because they all have different pip value. Okay? It's very important, ladies and gentlemen. So I hope you actually are understanding this, because without this, ladies and gentlemen, you are prone to over trading and over risking, right? Because you actually you won't have an idea of how much you're risking on that particular trade, and it won't be good for your account. This is extremely important, ladies and gentlemen. So please make sure that you understand this particular uh, information, because this is very important. All right, so this is what I thought I would share with you guys. This is the holy grail of forex trading. When you're able to calculate your risks and you have an edge, you'll be so much far better than most people, because trust me, most people don't even calculate their risks. Okay, so this is very important. So please make sure that you comment in the comment section. Let me know what you think about this video. Subscribe to our channel. Make sure that you hit the bell notification so that you get to be notified every time we drop a new video. All right, guys, until next time, goodbye and God bless you.